Hello and welcome to BQ Prime. You're watching Earnings with BQ, and my guest today is from Piramal Enterprises, Mr. Ajay Piramal, Chairman of the Piramal Group. Mr. Piramal, thank you very much for joining us on BQ Prime. Let me begin with the mix that you've got, the retail wholesale 55-45, which has gone up from, if I'm not wrong, 34-64. What is the kind of growth that you foresee in the retail segment?
The growth has been 57%. I expect that over the year we should have a good growth rate, not for a 57, but it should be in the 40s.
Okay. My question was also with respect to the kind of retail loan book growth which is coming in. Which are the segments where you're seeing this growth coming in from? Is it only the housing finance side, or you have been able to expand it to other segments as well?
The retail, what we have done is that we are really catering to Bharat, which is in the semi-urban tier 2, tier 3 cities. We have made significant investments in the retail space. Today we have 423 branches. We have invested a lot in technology as well. And therefore, we think, and the growth rate is not only in housing, but the growth rate, we have also expanded our product mix to include LAP, to include MSME, to include also unsecured loans, car loans, etc. So in these areas, we think that there is good growth possible.
Sir, if you can give us a sense of what is the expansion strategy that you're looking at expanding your network across geographies?
So we're going to expand our network in the next a few years. We'll probably take it to 500 to 600 branches. In this year, I don't see much bigger expansion of branches because we still, there's a lot of potential left in the existing branches. In addition, we have about 125 micro branches as well, microfinance branches.
Mm-hmm. Give me a sense of how the wholesale book is doing, though you've been able to bring down the book as a percentage of whole book. How is that segment doing? And it's within the wholesale, the real estate segment, how is that doing?
So the wholesale book, I want to just make it into two wholesale books. One is the old wholesale book, which is the wholesale 1.0 as we call it, and the other is the new wholesale 2.0. In wholesale 1.0, it was really mainly real estate loans which are left on the book. Most of the other corporate loans have we've been able to deal with last year. This we have said so publicly, and we continue on the journey of reducing this book. So this book, which was has been reduced the same quarter last year, it has been reduced by 34%, and we continue to reduce this book. The way we will reduce it is obviously there are some collections here, there are other security receipts, there are some sell downs that we do to ARC, some are complete sell downs that we do. So that will continue in that basis. On the other hand, we have the wholesale 2.0, which is different, though if whether it is in real estate, whether it's in corporate, these are smaller size loans, these are more granular loans, and these are loans which are not any structured loans, but they'll be loans against construction or against cash flow that can be measured. So that is growing. That's a book of about 3,500 crores today, and it is growing well. But it will be a measured growth in that.
Mr. Piramal, you have a good sense of what's happening in the construction and real estate space. Can you give us a sense of how things are standing at that point in time? I mean, a year back, there was some kind of stress which was there as well. Do you see the stress coming down? Do you see, the developers are much more cash rich because of the kind of pre-sales which we are seeing now in the market? And how do you see this sector evolving as well?
So the real estate sector, first of all, there has been now a segregation in the real estate sector. The good developers are doing well. The marginal developers have actually had a lot of problem, and therefore they have shut down. So earlier there was really no barrier to entry. Anybody could enter and start a construction. That you do not see anymore. That's one. Second, the good developers are still finding that there is good momentum in the sales. Compared to the lows in the earlier years, it has been much better. Both sales, there has been some price increases as well. But I don't think that the momentum will continue for long. You will find steady growth in real estate.
And do you see, we saw in between some kind of demand for affordable housing segment. Then recently we saw some reports that there is some slowdown coming into that segment as well. Do you see that when you are lending out to the players?
So there is some slowdown in affordable, but the markets that we are in, which is like the tier two, tier three, and all, there is still a adequate demand.
Okay. And within the personal finance or personal loan portfolio, we saw one of the industry players talking about that, the risk are increasing in that segment because of the unsecured nature of that loan. Do you also have exposure there? And do you agree with that kind of assessment that, the risk are increasing in that segment, especially in tier two and tier three?
So in unsecured loans, there is risk has increased, and therefore we have also tightened up our areas. So we do have unsecured loans as well, which is a small proportion of our book today, and we have tightened up our lending there. So all the parameters that we use for lending, they have been tightened further, so that whatever risk is, that we will be able to take care of it.
Mr. Piramal, how is the integration of the DHFL loan book going? Means, have you been able to integrate fully and maybe sell off some of them as well?
So the integration has been pretty successful. We will be almost completing, now we'll be completing 2 years by the end of September. And I think it's on track. We've been able to, the integration as far as the people is concerned, as far as technology is concerned, is there. Collection of the book continues. Some of the book, as far as the wholesale loans are concerned, it is a challenge because those were difficult loans, but we are not even, there was no significant value that we are attached to them. So I think we will be fine with that. The retail loans, which we are collecting them as per what we think, and actually we are pretty happy with the integration.
Mm-hmm. You came out with the buyback offer at 1,250 rupees per share, which is a steep premium to current market price. Give me, is it going to be a regular process at Piramal Enterprise to, give back surplus cash to the investors, or is it just one-off?
No, it's not going to be a regular process because remember, we are a finance company, and in
That's
that,
why I asked actually.
the only raw material that you have is cash. So the reason why we did this buyback today is because we had a large inflow of cash coming in from the sale of the Shriram shares. So we got 4,800 crores out of the sale of Shriram shares. Now this meant that our debt equity ratio today is only 1.2, and therefore we felt that it's right to for us to reward shareholders. Even after this buyback of 1,750 crores, the debt equity only goes to 1.3. I just want to highlight the fact that the promoters are not participating in the buyback because we felt that it's important that we let the minority shareholders get a good, get a larger portion of the pie. And this buyback, as you know, is at a 25% premium to what the market price was.
Mr. Piramal, stage two and stage three assets, how is it doing for you? Have you been able to control that and you've been able to bring down those assets?
So we have we have now made adequate provisions last year. As you are aware, we did a fair amount of cleaning up of the book, and a lot of provisions were made. I think now the quality of the assets is good, and it is in the right frame. So we don't expect any significant increase in provisions because of this, or losses because of the value that's in the book.
You have a very good knack of looking at the entire financial sector, and because you cater to all the segments, if I were to ask you what is the kind of headwinds that you see coming into next financial year, FY24-25, what would those be?
So the headwinds today, the only generally the growth in the economy is good. So financial services first depends on the growth in the economy. There is good growth in the economy, and I don't see a great issue on liquidity as well. So there is adequate liquidity in the system. There is a concern as far as the unsecured type of loans are concerned, and have people borrowed much more. But I think I'm not overly worried today. I mean, there is a concern, but it is not something that I would worry too much about. You have to be just careful about it. So, on the whole, I think it's an optimistic scenario.
Nothing from a construction and real estate point of view, because that we saw a lot of investments and activity happening in that sector. Do you see
So,
or there isn't much of a issue with respect to pricing of assets and how sales are happening in that segment?
I don't think so for next year because, as I said before, the cleaning up in the real estate sector has taken place. There are now only stronger players left. They have adequate cash. They're not as leveraged as before. And therefore, I don't see that as to be. And people also, I think, even the realtors are now much more conservative in their estimates. So it should be all right.
Mr. Piramal, it was a pleasure talking to you today. Thank you very much for joining us on BQ Prime.
Thank you.